Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I'm hearing you loud and clear, Coach Jay, on Friday, end of the month. Happy Halloween.
Happy Halloween, everybody. Welcome to At the Buzz, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. This is our first time meeting. I'm Coach Jay, been a Topstep performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
Hey, I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experience and some knowledge and hopefully help you become a better trader.
Awesome stuff. Thank you for that, Coach Paul. You are all our chat, our audience. Thank you for joining us each and every day that you do. And we understand today's Halloween. You might have some trick-or-treating plans, so maybe we'll try to get out of here just a little bit early, but we got some markets to cover. Let's take a look at the news to start. We did have some tech earnings yesterday. We had Apple and Amazon. We covered those. Mixed results there from Apple and Amazon. We had some comments from the president today about trade deal, getting closer to it, saying that he does want to take that 10% off of China tariffs. Also saying that he's no longer looking to make deals with Canada. And there was some talk earlier about maybe bombing Venezuela. That is no longer the case. There's a lot going on today. As far as planned numbers, we did not really have any planned numbers. We had the Chicago PMI did come out at 43.8. Forecast was 42.3. Outside of that, not much on the news. Coach Paul, anything you got on the news?
Nothing big on the news. Once again, focus on flash news, but with no big economic data. We had a nice jump last night on the earnings, but biggest news is the last day of the month.
Yes, it is. Last day of the month. So let's just get into the charts. We got 36 different markets we can trade with Topstep accounts today. To the downside, we had silver down 0.86%, soybean oil down 2.07%, and platinum, our biggest percentage mover to the downside, down 2.4%. To the upside, we had soybean meal up 1.84%, natural gas up 3.26%, and micro Bitcoin futures, our biggest percentage mover to the upside, up 3.74%. To talk about our big four, we had crude oil up 0.43%, the S&P pretty much flat, up 0.25%. Gold down, also pretty much flat, down 0.15%, and the NASDAQ up 0.3%, up 0.39% to round out our big four. Let's take a look at the weekly. I'm on an S&P chart here, Coach Paul. We were in the green room talking about this, and this weekly candle, what's going on here?
Well, we gapped. We did hold the gap, the Sunday night gap, or depending on what school you're from.
Yep.
We didn't fill it to the tick, but we came awfully close to filling the opening range gap Sunday and bounced off of it. But that weekly has a scary chance of being an island top.
Yeah.
What I mean by that, or a doji top on a weekly, if something happened this weekend and we gapped down, that would be an island top. It's a very rare occurrence, especially on a weekly. I'm not saying it's happened, but I saw that late today. All this action this week, we're really where we started. We're still higher on the week.
Yep.
Because that starts on the opening, and that was Sunday night's opening. But that's a red flag to me.
Yeah.
That's something that I'm going to be circling and paying attention to.
Definitely, we gapped up for the week. It looked like maybe we were going to go run and make those 7,000s, make a run for those 7,000s, but a pretty range-bound week, pretty much closing right under where we opened. Yeah, there's still that gap to be filled. Now, if we gap down, like you said, Coach Paul, that'll be that island top. Not something that we see often. but interesting for sure. Let's take a look at the daily. Put up the moving averages here. Still above the 20, still above the 50, still above the 200, all trending upward. Maybe getting a little extended with this gap up, but interesting there for sure. Uh,
You know, just adding, we're talking about news.
mhm.
This was the big news week,
It
right?
was. It was. Yeah, big Fed
Well,
Fed rate decision. Forecast. It sounds like none of the Fed governors know or haven't. They're not giving clues to what that December rate decision may be. And big
yeah,
tech earnings.
big maybe. Tech, all of that came out, and we ended up where we started.
Right.
I mean,
I do know that next week, I believe is it tomorrow? Is tomorrow the tariff deadline?
which one?
The China tariff deadline.
Yeah, I don't.
I
Just
think that is
wait for the
tomorrow.
next tweet, and we'll see. I don't know. It's a good question.
Yeah,
Maybe our audience knows. They know everything.
I believe it's tomorrow. I believe it's tomorrow. Huh. We'll see. November 1st. Yep, that is tomorrow. Uh, so we'll see. We'll see what happens over the weekend. Do we get any more news on a trade deal? Sunday open is going to be pretty interesting. Let's take a look at the 30-minute chart here. I'm going to take some of these moving averages off of here because that 200 is the interesting one. We opened up below that 200 moving average on the 30-minute chart. 69.11 is that price at the end of the day. And one of the things we talk about is what does volume say when we get up there? We traded up there price-wise to that 200 moving average on the 30-minute chart. But even when we tested it, if we look at the candle that tested it, volume never traded above, right? So above these 6900s, above 69.11, just really no interest in from buyers to continue to push this higher. We held right around 50% of the Fed candle. Right, I'm going to keep that one marked on my chart until we get another candle to anchor to. But rejecting out of there and right off that 200 moving average was a nice short today. Really nice short today.
Very interesting. And you put up the Fed candle.
Yep.
We really have not recovered from that. And every time we rally, we fail. Like yesterday we were failing and got short covering into earnings reports. But something to me it's changed a bit. That the
Yeah.
breaks are hard and the rallies are short lived. But we failed at 200 moving average before the New York Open. So
Yep.
it was on very light volume. Um, and now we've settled under the 200 on a half hour. And we tested it, rejected it. Now it's the end of the month, last trading day of the month, probably not much interest.
Yeah.
What was the daily volume like?
Let's take a look. Daily volume was above average, 1.61 million. Average is
Wow.
1.5 million. So above average. On the downside, it's kind of in line with what we've been seeing. Any moves to the downside have been on above average volume. And the same thing with the daily today, above average volume.
I would have thought, I mean, my first impression would have been it was light volume,
Yeah.
but that was good volume. So there was stocks moved.
Yep.
Um,
Uh,
so looking forward into next week, the key point is we're losing momentum. That's at the very least, whether it's profit taking, I don't know, but technically feeling a little heavy here at these levels, especially not following through on the FOMC candle.
yes, absolutely. Let's take a look at the New York session open. Really nice trade here. Urgency trade. If you were wondering what we call an urgency trade, it is the session open. Volume left that range immediately, and we rejected off of 50% of this range all day. It gave us once, twice for a little scalp, 3 times, and even towards the end of the day, 4 times where volume left this range. And every time we came up here, it was a rejection. 50% of this range was right near that 6,900 level. So not surprised to see the market's rejection from there. But a really nice kind of a two-sided market today. Fast markets was range bound. I think I saw the guys trade on both sides of the range, but then we attempt the gap fill, no gap fill, and we bounce right back up to the opening range. And shout out to Jack, who got short into the close here for a really nice trade. So although the market really didn't go anywhere directionally for the week, range bound markets presenting a ton of opportunity where it's a big enough range to trade, right? We're looking at the New York session, 60-point range, high to low. There's more than enough opportunity in that.
There was a nice 2-to-1 trade on that urgency.
Yep.
And yeah, it came right off. That 2-to-1 was just in time. But interesting. So we get that big move on light volume last night. So it wasn't very impressive, but we talk about volume a lot here on this show. So night volume, that's more reactionary volume.
Mm-hmm.
But interesting, after that late spike, when the real money was on the table, it was selling on good news.
Right.
So the end of the month helped that, and once again, that theme, but doesn't matter. Right there, we have some information. When it was like playing poker and you're into the second hand now, and someone goes, "I'm all in."
Right.
There was volume there here. Or they double the pot, and you're like, well, now you got some information.
Right.
I liken that today's action to that, because it was like we talked about, it was urgent. Like they came out to sell.
Yes, they did. Got a question here for you, Coach Paul. Coach Paul, could some of the trading in the indices be end of year repositioning and cleaning up of the books, or more so losing of momentum? I mean, today was kind of it was the end of the month, but what do you think there, Coach Paul?
I think more the end of the month, but it's a good point coming into November. We could see some of that profit taking, but today I think that's mostly end of the month. Also, even that I think had a lot to do with it. Do you want to push? If you're a money manager, do you want to push here at the end of the month? Remember, they get paid by their performance in the month. They're not apt to get too aggressive unless they're wrong.
Yeah.
Where they have to move. So today they weren't. They're very long. So it's a good
100%.
question. We'll see. I think it'll be interesting coming into November. If there is some liquidation.
Yep.
Great
Good
question.
stuff. Good question. Let's take just a quick look at the NASDAQ. Similar story, maybe just a little bit stronger, holding up a little bit better, but still closing the week under that major 26,000 level. Has the potential to be that island top as well. Taking a look at 30-minute, same story here, rejecting off that 200 moving average once we sold under it. A nice rejection there. So I'd be watching that going into next week. And I think we do have the 20 crossing below it. Yep, there we go. 20 moving average crossing below the 200 now. And that hasn't happened since October 22nd. So I'd be watching this going into next week to see how we open up. Quick look, the Dow made new all-time highs this week, 48,214. All of these equity markets look very similar with the exception of the Russell that said, okay, whatever, I'm just going to sell off. But still holding up somewhat in the Russell. But yeah, all the equities opening up next week is going to be very interesting. Are we going to open in that gap, below that gap, or above it? Next week is sure to be a great week. Tomorrow is November. Anything else on the equities, Coach Paul? We'll move over to the metals.
No, someone had a good question here. Oh yeah, ES really needed to pull back. How long has it been since we've seen a 5% pullback? And I think was March. Well,
Yeah, it might have been. I
it
know
seems like it.
we were going. Yeah, it's been since March.
Yeah, good point.
Well, since April. Yeah, this is a 5% pullback here. Outside of that, we haven't really gotten one. So we might be due. We might be due. Maybe
For the
Santa says
shorts.
inflation hit Santa as well. Maybe we need to sell for Christmas. It's getting expensive. But yeah, we have not had a 5% pullback in the S&P. We got close to one here, but this was all in one day in the NASDAQ. Interesting times. Even
Yeah.
2% pullbacks are getting close to rare, right? Yeah. Yes, they are. Yes, they are. We got one more question here from Malik. How do you all feel about moving stops to break even? I feel like it's been hurting rather than helping lately. That is a great question. Coach Paul, you go first.
Well, if it's not working for you, it could be part of your system. You shouldn't do that. Or just take the risk. Without knowing your system and the way you trade it and your risk, um, you're getting evidence that it's not working. So, um, keep it. If you can't back test it, forward test it. Understand that. Now, I think it was Coach Robert did a test on that, and he advised he doesn't do it. He doesn't move he keeps the stop where it was unless there's new evidence to get out. So I'm leaning towards I can tell you what I do. I don't. Now, if I'm getting if I will do this. Let's say I'm up 1-to-1 on a trade.
Mm-hmm.
I could move it to unchanged, but I'm not going to move it any higher than that. Why would I move it to unchanged? Because then I could have a free risk trade. Now, maybe that's something you could look at, and then I'm really not worried about it. You can just really stop looking at it. So those are other things to look at, but you have to really keep track and forward test it for your strategy, and you could go both ways.
Yeah. I like what you said there. Maybe once the trade is showing you some profits, uh, where usually like to go to break even is once I've secured profits. So let's say I take multiple. Let's say I'm in a five micros short. At a 2-to-1, I take a couple off, but I think there's more room left in the trade. I'll go break even with the rest of the position because at that point I could always get a re-entry if it needs to come. If we've gotten to a 2-to-1 already and I'm not taking the full position off, I probably don't need to see the market come back to my position. I'm just going to take the money off the table. But if I'm going break even after 5 ticks of being in the profit, I'm just asking for a bunch of quick stop outs, paying for commissions and maybe some slippage, seeing some red, and then more more than that, the opportunity cost, right? If I keep going break even because I'm afraid to take a loss, and then the market does exactly what I expect it to do, what's the quality of that next trading decision I'm going to make? Uh, in my experience, it's usually a lower quality decision because it comes from frustration of seeing the market do exactly what you thought it was going to do. So if you put on the risk, take the risk, and understand that no one has a 100% win rate. So going to break even too early is probably more so loss avoidance than anything, and usually leads to bigger losses in my experience. Uh, why is the market closed but keeps moving? The market is not technically closed. It closes at 5 p.m. Eastern time. Your Topstep accounts have to be closed by 4:10 Eastern time, but the markets are still technically open. If you were trading in a personal account or a live account, you could still place trades right now. But Topstep accounts have to be closed. All right, let's take a look at gold. Gold on the weekly. What did we do here? Did we close in? Did we close right at it?
We closed right at it.
Okay, so
We didn't
this,
really break too hard. Who was that? Our listener who said buy it. I want to give him a shout out. It was pretty bearish, looked pretty bearish. Um, but I mean, that's hardly a big recovery, but it's holding. Um, that weekly, we're still, like you said, we're closed right there. We're at a point here. It's not going to stay at this level, in my experience. I think there's some big trading ahead. Right now, it could be a pop a higher. Um, it did hold that weekly, although it filled the gap there. I mean, where it tested that low, the previous week low, but did not close below it. I think we're in for some exciting times in gold next week.
yes, we are closed pretty much right at it. That week's low that we were measuring was 40.1130. Move this down just a little bit, and we're trading 40.1650 right now. Still has the potential to close under it. Again, these markets are still open for another 26 minutes or so. But man, that is pretty close to what we were looking for. Still on the daily in the middle of the 20 and 50 moving averages. Found a comfortable space here, holding that September 2nd VWAP that we've been talking about as a support all week. 39.48 is that price. Still going to be relevant until it's no longer relevant. What happened?
No, look at how that's held. What, 3 days in a row?
3 days. 3 days.
It's holding. It'll be interesting. I guess next week is really going to be very. My my spider senses tell me it's going to be very. It's going to be a nice move next week.
Oh, yeah. Courtney says, I asked Chatty G about 5% pullbacks in the SPX. Since 1950, 5% pullbacks 3 to 4 times a year. Post 2000, about 2 to 3 times per year. So did we use them all did we use all our 5% pullbacks this year already? Do we have any
Yeah.
left? Do we have any left?
I did a comment here from the unknown trader about stops. It says you need a valid reason to move to break even. Most people just move it out of fear. Great comment. Yeah, that's a valid reason, is a scratch reason. But if you're doing it out of fear, then you need in your journal to understand that, and then see the results versus that you got versus the results if you had stayed with the original risk. You have to build that so you understand it and learn from it. But a great comment. Thanks for that.
We're getting a ton of trade management conversation in the chat. Dan Trader here says, trade management question. I've been trying to add to winners. So I'll add one lot, then halfway to take profit. I'll add one lot when halfway to take profit, then it goes against me. So instead of having a positive trade, it will be flat or even a loss. Any advice? I think I need to go with 2 lots at entry and scale out one halfway to take profit. So the way, Dan, I like to think about adding to trades is, you know, we can measure what we think the target for the trade is going to be, but we ultimately don't get to decide that that's going to be there, right? So let's say you take this, let's say you get short gold right here. Actually, we're going to go short gold here. And my target is 2-to-1 risk to reward, right? So we'll just put it down there. And we'll do this. Let's say that's my trade setup, right? And then by default, what you're saying is I'm going to add when we get to 50% or when we get halfway to my target, right? So if we get 10 points into this trade, I'm going to add another short here. All right, so I'm adding another short right there. My question is, if you mismeasured this, right, then that kind of ruins the average on the trade. The way I like to think about it, Dan, is if you, let's say you were not in this original trade, right, where you didn't get this great trade entry, would you enter a trade short here for this same target? If you would, if you had no position on it and you would actually enter a short here, then go ahead and add it. But if you're adding for the sake of just adding to the position, sometimes that may not be a good enough reason if it's not still a valid trade in this location, right? Because what if I mismeasured it, right? What if I thought the market was willing to present more than it was? Then this may be a spot where it's turning around, where I already have a decent profit. I'm already at a 1-to-1 at this point, right? So adding to winning trades is great, but I think we need to do some analysis on the expectation of the move from the market, and does this move have the potential to go further than what I'm looking for as far as adding here. I think a good way to try it, let's say you're trading with one mini in the equities, try adding, instead of adding the same size, try adding smaller, right? So if I'm in long a mini, maybe add a micro to start, right? Just to see, because a lot of times what will happen is just like, oh yeah, I add the same size, and now you're just doubling the risk you have on that trade right up front, right? If you're seeing the trades come and stop you out often, maybe add smaller size so that doesn't, you're not turning a great winning trade into a losing trade or a scratch trade at that point. Any suggestions you have on that, Coach Paul?
Boy, it's a good question and a tough question.
Yep.
I used to add to trades a lot, and then in about 10 years ago, I stopped.
Mm.
It's become two questions are with this: what time frame are you using?
Yeah.
You're using a short time frame, okay? But I like what you said, treating them as different trades.
Hmm.
So I stopped doing it. What I did now is I take trade units or risk units, and if it's within the trend and I have a breakout trade and it's within the trade, like an opening range breakout, I'll do 2 units of risk
Mm.
when I enter. If it's it's an uptrend and I get a sell on a like we did this morning and we had urgency or a breakout, I do 1 unit against the trend.
Gotcha.
But it's a tough trade, and if you're struggling with it, you might get the answer. Because it makes it a lot tougher to manage.
Yeah.
Um, so if you're struggling with it, I would stop for a while and maybe do it on your practice account and find when you're doing that what feedback you're getting and whether it's even worth it.
Uh, Dan also, made a point early, is I think I need to go with 2 lots at entry and scale out halfway. If a 2 lot is your max allocation, then and max, Coach Paul was just talking about units of risk, right? If a 2 lot is your max, you could also think about, maybe putting on the one and then getting an earlier confirmation than 50% of your profit target, right? We see Dakota do that often, right? And I'll do it as well. If I think, okay, I can get up to 10 micros on this trade, I'll put on one when I think the trade is setting up, and then as I'm getting confirmation early, right? And I have to wait for confirmation, right? I can't just add because I want to, but as I'm getting confirmation, the market's moving in my direction early in that move, then I can, build into that position as it's going. But yeah, that is definitely a skill that needs to be developed, because again, you don't want to ruin great trades. But it's a good question for sure.
I really like that idea,
Yeah.
by the way, because when you get to add to a winner.
Right.
I don't like, it's versus adding into a loser or average. Well, adding into a loser, if you put on, if your unit is 5 micros,
Mhm.
let's do even numbers, 6 micros, then you can buy one and get some information. If it's not working, you might just get out in a small loss. But then as it starts to turn and you get some more information, you can add that way to get to your max allocation. Great point, Coach.
Tried it in a practice account. I think certain trade setups facilitate adding to trades better than others. Trend trades definitely. Range trades, if you're adding to a range trade and then your 50% is right in the middle of the range, could skew the trade a little bit. But great question for sure there. Let's take a quick look at gold again on the 30-minute chart. Right at that 200 moving average right now, held as a support. Kind of a balanced day, kind of been in balance for a little bit in gold. We will see what next week brings. Crude oil, still in this range, Coach Paul. Anything you
Boy.
want to talk about in crude?
Buy low, sell high.
Yeah,
um, we're still under the 2, but notice in this daily range, what's the support?
20 moving average,
What's the resistance?
50 moving average, or the
And
200.
we're under the 50. So error on the side, to me, it's error on the side of selling, but that 20 is starting to flatten out and hook. So, but really the 50 and the 200 are right there. Until otherwise, that's your range to find an opportunity. For those of us who have breakouts, take one side. And now at the half hour, becomes important. That we under or over the half hour to do that one word. So to me, the failure of the 200 on the half hour would be an opportunity to sell back into the range.
There we go.
But for those of you who are range traders, you're better than me at this. You should be eating like an elephant.
This is the market to do it in. This is the market to do it in. Stuck in a range right now. Doesn't mean it's not presenting opportunities. May have to wait a little longer than if you're, trading the NASDAQ and you're used to huge moves in a short period of time. But definitely some opportunity in crude oil if you are a range trader. I want, we got a question here. What do you guys think about trading trends? I've reached my payout off of this and been pretty profitable. I think that's exactly what we try to do every day. Identify the flow and the trend of the market, and swim with the current instead of trying to swim against it. Every once in a while, you find yourself trying to swim against it, and it's kind of hard to do. So what we try to do is identify trend, usually starting with a daily time frame, going down to a 30, and then seeing how the shortest time frame, your execution time frame, aligns with that. A lot of times using volume to do that, right? Where if this VWAP flow is to the downside, are there opportunities for longs in this? Yes, but what I use to identify trend is this VWAP, and it's trending to the downside. So I'd be better off trying to find places to sell a market like this. And yeah, we could say that in hindsight, but we see this happen all the time, right? How many times, if you review all your trading and days that go well and days that don't go well, if a day doesn't go well and I'm buying against a downsloping VWAP, maybe that's why, right? If I'm selling against an upsloping VWAP, maybe that's why. So yeah, fighting that trend. There are going to be counter trend trade opportunities. There always are, but when you're aligned with what the market is saying, it's a lot easier to not get run over. So keep doing it, especially if it's working.
Yeah. And also just be aware of the trend. So you could, if you want to, if it's an uptrend and you want to sell it, be aware of that. You got to be quick, and it got to be well defined. But the trend is your friend.
Absolutely.
It's easier to swim with the stream than against it. But I'm not discouraged, but understand when you know that you get a trade and you want to fade it, that you might want to tighten up or size down if you're taking a counter trend trade.
Absolutely. All right. We went through the big four. We went through those pretty quick. We do got some more questions in the chat. Jen and John asked a question. Can you guys talk about consolidation? What is going on then? How do you trade them? How do you know it's beginning or ending? Is there a time frame that confirms consolidation? Yeah, I think it's going to start on the higher time frame. I'm going to look at a daily to start. Let's look at the NASDAQ. Look at the daily. What has the NASDAQ been telling us this week so far? That it's pretty much in a range, right? We have a ton of inside days, a lot of indecisive days. So when I zoom in to my shorter time frame, right, where some people might be executing on 15-second charts and looking for trend, but not realizing that this entire map is saying that we're comfortable trading these prices. So identify the extremes, right? So to me, it's going to start on the daily. How can you know a consolidation is beginning or ending? You hear Hogue every morning on the opening call where he says we're opening in range and in value. Stay patient. That's, to me, honestly, one of the greatest signs that we have the potential to be in a consolidation. What Hogue is looking at often is a volume profile, right? Volume profile. Here's the value area, the shaded area here. So we're opening inside yesterday's range and inside this value area. What that's saying is the market is comfortable trading these prices. So I might look at this and say, oh man, I want a gap fill, right? This should be a gap fill. Gaps are supposed to get filled. I'm a trader. I've been doing this for a very long time. I know that gaps get filled, so I'm going to short it. But the market says what? We're comfortable trading these prices. So, Mr. I'm looking for a gap fill. Please keep looking for that gap fill, especially at the lows. Sell it because as soon as you sell it, we're going to buy it back up and make money off of your assumptions instead of what the market's actually doing, right? So seeing the market open up near prices that it's already traded, especially the day prior, is a great way to see that we have the potential for a range. Now, the range in this is a pretty big range if we look at a higher time frame, right? If I'm on a 30-minute chart here, this is almost a trending move inside of that range. This is almost 400 points high to low in the NASDAQ. But identifying where these extremes are happen on a higher time frame, and then we can go to our smaller time frames here. Now, on a smaller time frame, how do I determine whether we're trending or consolidating? I'm going to go back to volume, but what is volume saying? From the open, which is the opening range here, we have a down sloping VWAP. Now, it's not going to go. What's the ideal trade, Coach Paul? I get in short here, and the market just one candle drops 200 points to my target.
That's the wish. That is not even ideal. That's the wish trade.
That's the wish trade, right? That if every trade I entered could do that, then I would be the greatest trader ever, right? Just get in a trade, drop straight to my profit targets, no consolidation. So do you consider this a consolidation? And it kind of maybe looks or feels like one because I'm on a 3-minute chart. But now if I zoom out, does it still look like a consolidation? Probably not. If I zoom out a little bit further, does it look like a consolidation? No. And then if I go out even further, looking less and less like consolidation and more just like we are channeling lower, right? So a lot of times I think consolidation, we get stuck here like this. And we think, oh man, the market's not going anywhere. Well, yeah, in this time frame, it stopped moving. But volume was still trending. Now, somebody give me a market that didn't move today. Crude oil. Crude oil. You see the angle of that VWAP that we had in the NASDAQ? Crude oil off the start. Actually, that's not even the open. Let's find the open. That's the opening crude. You see this angle here? This is what I'm considering a consolidation or a range. This VWAP angle is pretty flat. We got a spike of volume off the initial move, but After that, what did VWAP do? It flattened out. So this is what I would call a range bound market. Now, how do you trade it? For me, most of the time, I don't. I don't know that I look at every market condition as a tradable market. I actually do way better when I don't do that, right? If I only identify markets that fit my process, I do a little bit better, right? When I try to trade every single market condition that there is, and I'll trade a range bound market, but for me, I think we could probably all serve better to identify when markets are telling us to stay out. How do you identify consolidation, Coach Paul, and what do you do with it?
Well, there's an old method because I'm not good at trading ranges.
Mhm.
So I've decided to trade breakouts. Well, breakout of what?
Right.
A range. One of the old ways to define a range is to look at the last, and remember, it's all relative to your time frame. So the last one of the ways is it within the last, the high and the low of the last 20 candles. That's consolidate. You can use that as to tag it as having the DNA of being in a range. Now, it stays in that range without closing out of it. You're looking, they're just, you're looking to sell the highs of that range and buy the lows until it closes out, which would be a breakout. So one of the ways to identify is just go count back, keep 20 candles, mark the high and the low. You'd be surprised how much time it spends in those last 20 candles. So that's the way I've looked at consolidation. And usually on a breakout, you need some kind of volume. And it's a
Right.
close, not just the price. That's how I look at consolidation or range.
There you go. There you go. All right. I think we got through most of the questions. Like I said, if people want to go trick or treating, we can give you a little bit of time back. Coach Paul, any other markets you want to discuss before we go?
I did want to look at, well, this was FOMC.
Mm-hmm.
Let's
Week.
look at what?
FOMC week.
Let's look at bonds and how they reacted.
Here's the 30.
30 side with it. There's consolidation for you. Let's look at the daily.
This is the daily.
That's a daily. So now there is a tool to go back and mark days. We don't have it here, but we're within the last 20. We're in the range. So I want to go into that. For this to really break out of it, it's got to close below the last 20. Otherwise, this has been a tough market to trade.
Yep.
So, but we're still above the 20 moving, the 200 moving average. And we're holding here, and smaller and smaller range on really random volume. Look at it, it's higher, it's low, it's all over the place. But look at the average. This is a place, if you're range trading, this is what you're looking for.
Yep.
Now versus Bitcoin.
Holding that 20-day moving average. We talked about this one yesterday, chat.
The
Coach Paul,
200.
200-day moving average. Coach Paul, you were out yesterday, but we were talking about this at the close yesterday and saying, watch this 200 moving average on Bitcoin. If we don't get any volume through it, there's potential for a bounce here. It's been supportive this entire time.
Yeah, the more it just stays there, to me, the bigger move it's going to move if it gets underneath it.
Oh, yep.
especially coming after all the news and a big news week. Let's look at a weekly.
In the middle of the range here,
Yeah,
between the 20 and the 50.
but it sure has lost its edge. It's trading like a stock, unfortunately.
Yes, it is.
So let's watch that 200-day moving average. Other than that, it's Halloween. If people want to go trick or treating or start your celebration early.
We got a couple more questions here. Hold on, I think I saw one. Best way to set stop losses on ranges for the NQ with wicks being so random. My answer was going to be don't trade the NASDAQ, but it is. I'm going to go with Coach Paul's suggestion: two ATRs on whatever time frame you're taking the trade. If you look, oh, it's behind me. Hold on, I'm gonna slide out of the way. Go this way. Nope, I'm gonna go this way. All right, there you go. We got the ATR value right here. All right, you can see when I hover over candles, this ATR indicator at the bottom of my charts.
We lost your.
Oh, you should be able to hear me now. You should be able to hear
There
me
we
now.
go.
Sorry, doing some moving things around. Hit the mute button. But this ATR indicator right here, which is this white line, I don't even care about the line. I only care about the number when I'm getting into a trade. Let's say I was getting into a short in the NASDAQ. And let's say I got this trade exactly right. How many times has this happened to somebody? You get in a trade in the flow of the market. You have the direction completely right. But I say I only want to lose $200 in the NASDAQ. So I'm going to trade it with a 10-point stop. And I got the direction right. We got an opening range trade, looking like we're going to break out. I got the direction right, got decent trade location, but I only want to lose $200. I can't afford to lose $200 because I'm trading the NASDAQ minis. I know how crazy this market moves. So I got to keep a really tight stop, really, really tight stop. That's how traders trade, right? Then I get stopped out on whatever this random wick, like you said, in the NASDAQ. I get stopped out on this random wick. And then the market drops 100 points from my entry. And now I'm frustrated. So then at this low, I knew this was going to happen. I just knew it. I knew it.
And it's going to continue.
It's going to continue. I'm right. So now I'm going to take 5 minis short here on this XFA or combine because I need to make back the money that I was supposed to make on this trade. And then a 30-point move to the upside blows your entire account. Anybody ever done that before? Jamal says happens to me every single day. Let's fix it. Let's fix it. Let's fix it. So we have a great trade entry here, right? The ATR, here's that value right there, is 16 points. At a minimum, your stop should be at least 1 ATR. But Coach Paul's suggestion is going to be 2 ATRs. So my stop should be 32 points. All right. So here's the ATR value from when the time I took the trade. It says 16. I'm going to do simple math. I'm going to multiply that by 2. That's 32 points. Now, you might be saying the ATR is measured in points here, measured in points. You might be saying a 32-point stop in the NASDAQ is too big. That is $640. I only want to risk $200. Let's do math. What can we do? What's the variable that we can change to only risk $200 here? Somebody in the chat, give me that answer.
Bueller.
Yeah, I know it's Friday. I don't mean to be giving out homework. but Ches just said it. Ches, you just said it, right? Trade micros, right? How many micros, if I only want to risk $200, how many micros can I trade? 1 micro up here is going to be $64. 2 micros would be $128. 3 micros would be $192. I think I did the math right. Somewhere around there. So I could trade 3 micros on this trade still risking $200, but my stop is based on the market price action and not my account size. I can't try to fit the account. I can't try to fit the market into my account. I have to make my account work with what the market is doing, right? So you could try to trade with a 10-point stop. And if you do, what you'll probably realize is if you've figured out some way to make a 10-point stop on the NASDAQ work, even a little bit, right? I've done this as well. So if you've figured out how to make a 10-point stop in the NASDAQ work, even 50% of the time in your trades, what that tells me is that you have amazing trade location for your entries. Because if you can find out how to get a 10-point stop to turn into winning trades, you're not just throwing on random bullshit, right? But what happens is the NASDAQ moves more than 10 points in a 1-minute candle. So unfortunately, more times than not, you're going to get stopped out. And then that's when you're dealing with the frustration as a trader. If you can scale down, keep that same trade entry, but then just give the market more space and time to work, you'll see way bigger trades. And trust me, I'm telling you this as somebody who traded with a 10-point stop in the NASDAQ for a while. And that was when the NASDAQ was a lot cheaper than it is now. So if you figured out how to make that work at all, widen out your stops, use the ATR value, and trust your trades and let them work out. Now, what you're looking for as a target, I'm going to go with Coach Paul's suggestion again, a 2-to-1 on that trade. So, sometimes people are like, oh, I'm going to go to 10-point trade for, I'm risking 10 points and I want to make 60. You can still get your 60 here, but you got to pay a little bit more maybe to do it. Here's a 60-point trade. You get a 2-to-1 and I'm out. Right. But the other option is trade the S&P. but there we go. That's all I got there. Coach Paul, anything you want to add to that?
I thought Edgy Investment says ATR saves lives. I love that. I'm going to put that on a t-shirt.
Yeah.
Now, here, remember, the market, you can't control the market, but you can measure it. So when you're using an ATR, you're measuring the heartbeat of the market.
Yep.
And if you're trying to get inside of that, well, that's just natural vibration. Well, to me, you're fighting nature. I mean, it's the tempo.
Yeah, really though.
And believe me, I've tried to do it. So what I've heard would a better attempt is size down and get a wider stop that's in tune with the market. That goes back to the principles of successful and consistent traders is predetermine your risk. Accept the risk or don't take the trade. Okay, now it makes it so much easier to handle the trade versus, damn it, I keep getting stopped out. And then you end up chasing. So you want to get control of what? The market or yourself? I'd say get control of yourself. And if you find yourself getting stopped out a lot, it's most likely because you're asking the market to do something it's not in tune to do.
100%.
Robert De Niro. I like that.
Good stuff. I think we did it. For settlement price, what time is settlement price determined? It's right at 4 p.m. Eastern time, if I'm not mistaken. And it changes for each market. If you look at the CME website, and Coach Hoop does a class in Discord, often he talks about the fundamentals of the market and he shares some of those things. It'll tell you exactly the settlement for each market. I don't want to say, yes, this settles at this time because there are a couple different markets. If you look at the metals market, silver, platinum, gold, copper all have different settlement times. Crude oil has a different settlement time than the equities that have different settlement times than anything else. But if you look in the CMU site for the equities, I'm pretty sure that time is 4 p.m. Eastern time. 4 p.m. Eastern time. Coach Paul, anything else you got before we go?
Spend a little bit of time, less than an hour, reviewing your trade or honing your trade plan. Begin journaling, understanding if you're being held back or you're having a bad week. Is it because of my plan? I'm not following it, or is it because my plan isn't working? And you would be able to identify places of improvement. When you improve, you get better, and when you get better, this becomes an easier game. All right, so spend a little bit of time. The other time, go out, enjoy the Halloween weekend.
Absolutely. Have a great weekend, everybody. Coach Hoop, I think Coach Hoop is still doing his class in Discord, 6 p.m. Eastern time, and then no other classes after that. Make sure you join Anne Marie for the market kickoff Sunday 5:45 Eastern time. Remember, clocks do change. Clocks are changing this week. It's about to get real dark here in the Northeast.
Ooh.
It's gonna get dark at 4 o'clock every day. Can't
Oh,
wait. Can't wait.
that's this weekend, isn't it?
That is this weekend.
Like,
Yeah.
Pullback.
Sunset at like 4:30. So make sure you spend some time outside while you can. Enjoy that sun, even if it's cold out. Need to put a jacket on or whatever it is. But trade well, everybody. Manage your risk, and we will see you all next week. Have a good one. Bye.